Welcome back to the Energy Signal Podcast, episode number 10. It's crazy. We're already 10 episodes in. I cannot wait to get to 100 episodes. And of course, the Energy Signal Podcast is your one-stop shop for the latest trends, policies, and market moves shaping the U.S. and global energy landscape. I'm your host, Josh Lefebvre, coming to you from the energy capital of the world, Houston, Texas. We are recording this episode today, Sunday, December 14th, 2025. In this week's episode, we'll be looking at how oil has slid yet again, while natural gas also took a massive beating. And this just reminds us of how fast and how volatile these markets can be, especially when it comes to energy. We'll also look into Exxon's rally after raising its long-term growth outlook. We'll be looking into how Antero has made a multi-billion-dollar bet on Appalachia and Targa's Midstream buying frenzy, both of which are signaling producers see gas as long-term and durable. How interesting. And of course, one of our biggest stories of the week is, of course, the U.S. seizure of a Venezuelan oil tanker just before a warrant was about to expire. And this, of course, has been brought on by escalating sanctions. And then finally, we'll look at how AI-driven power demand is reviving nuclear plants, with NextEra restarting many of its reactors to feed these growing data center costs. On now to our commodities. Well, oil drifted lower yet again this week as the broader risk sentiment stayed pretty much bearish on oversupply concerns. By Friday, the WTI, West Texas Intermediaries, settled at $50.44 after opening Monday at $60.15. This, of course, was a weekly decrease of 4.51%. The Henry Hub Natural Gas Index also took a massive beating this week, opening Monday at $5.10, which was a previous high, but finished Friday at $4.11, a nearly 20% decrease as both weather and storage expectations are set to have played a part in this massive fall. On now to our big US stock players. First up is ExxonMobil, ticker symbol XOM. Exxon opened Monday at $115.83 and closed Friday at $118.82, a weekly move of 2.58%. Now, Exxon stock got a positive lift after the company raised its earning and growth production outlook through 2030. This included boosting earnings cash flow targets and expanding upstream projects in both the Guyana and the Permian. And now this is a clear signal to investors about the long-term growth of this stock and their plans. In other news, Chevron, ticker symbol CVX, they opened Monday at $149.25. They closed the week off at $149.99, a weekly move of 0.5%, basically no movement on them. And then finally, ConocoPhillips, ticker symbol COP, they opened Monday at $92.53 and closed off the week at $95 and 5.4%. Now, this is also a weekly move, an increase of 3.25%. On now to our weekly deals and drills. Our biggest story of the week is Denver, Colorado-based Antero Resources, ticker symbol AR, is set to acquire West Virginia-based HG Energy's gas-producing assets for $2.8 billion. In a separate deal, Antero's Midstream arm is also set to buy HG's midstream infrastructure for $1.1 billion. From these deals, it's becoming extremely clear that many companies are betting on gas demand being long-term, and the increases in power consumption are going to increase LNG exports. There's no doubt about that. In other news, if you recall last week, we covered Houston-based Targa Resources, ticker symbol TRGP. They announced that they would acquire Stakeholder Midstream. Well, this week they've made another announcement for an acquisition, this time going after Dovetail Midstream. Dovetail Midstream, of course, is a subsidiary of Riley Exploration, and this deal is for $111 million. Now, Dovetail's assets primarily consist of natural gas gathering infrastructure, and they primarily serve production in Eddy County, which is in New Mexico. Big picture, picture, Targa is roughly 1 million barrels per day in NGLs moving on its existing infrastructure. And it's in the middle of a build out that includes 5 new Permian gas plants and the 500,000 barrel per day Speedway line. And that's set to expand to 1 million barrels a day in 2027. So if I were you, I would keep a very close eye on Targa in 2026 and 2027, making lots of big moves. On now to our energy geopolitics. And our biggest story of the week is that the US has just seized a tanker off Venezuela's coast just as a court-authorized warrant was set to expire. And this, of course, it makes it the first physical seizure of Venezuelan oil since sanctions first started in 2019. Now, this tanker was allegedly loaded with roughly 1.8 million barrels of very heavy crude. And US officials are alleging that it was part of a network moving sanctioned Venezuelan and Iranian oil. Now, sanctioned oil is, of course, oil that cannot be legally bought, sold, or transported unless a specific license is granted. Now, it's reported that Washington is preparing to intercept additional vessels, signaling a shift to a more direct enforcement at sea. Venezuelan oil is, of course, highly sought after, especially in the production of diesel fuels, making its exports crucial. On now to our section on renewables, which I think I'm going to extend to include both renewables and nuclear energy. And the reason being is that these days there's just not enough US-based renewable energy stories. And that's unfortunate. But hey, at least we're seeing a resurgence in nuclear. Basically, I want this section to include anything non-fossil fuel related. And our biggest story of the week, of course, is NextEra, ticker symbol NEE, the utility company, is reviving many of its nuclear plants to meet the AI-driven power demand. This includes restarting the Duane Arnold nuclear plant that's based in Iowa under a 25-year purchase agreement to supply Google with additional data centers. Now, if you've been in any way keeping up with what's going on in the world of energy demands, you'll certainly be aware of how the current data center boom is driving a renewed interest in nuclear as a zero carbon energy source, including reactor restarts and many future small modular reactor contracts. NextEra has also extended nuclear output from its Point Beach plant, which is based in Wisconsin, into the 2050s. And this, of course, is signaling that many utility companies are now locking into multi-decade nuclear supply to support long-duration energy demand growth. To wrap up this week's episode, I wanted to touch on two main points, two main themes. And that, of course, is what's going on in Venezuela. As I mentioned in last week's episode, the U.S. originally went in there with under the guise of reducing migrant flow, reducing the trade of drugs coming in from Venezuela. But of course, as many had speculated, I think there's a lot more going on there that really, Venezuela has some of the largest oil reserves in the world. And the fact that they've just seized one of those oil tankers, even though it was sanctioned oil, still points me in the direction that there is something more potentially nefarious going on with, again, the U.S. seeking to control the supply of energy, specifically oil. And then the other point I wanted to tag on is I've scoured the internet. I do my research every week, and there's just simply no stories right now on renewable energy in the US other than Trump and his administration just shutting these projects down or, reducing any types of funds that were originally going to these types of projects. And like I just said in the last segment, though, at least we are seeing a resurgence in nuclear energy, which again is not considered a renewable. I mean, it still comes with its own set of problems. Of course, nuclear waste being the largest. But, I think there's a lot of advantages to nuclear power. And as I've been saying over many episodes, in order to keep up with the demand of, the energy supply and all these growing data centers, we're going to need to use every single source of energy that's given to us, right? Renewables. So like solar, wind, even fossil fuels, gas, oil, and then nuclear. They are all going to play such a big part over the next 30 years that, we can't ignore these other factors. So again, I hope you enjoyed this episode. This is Josh signing out.